Alrighty. All right. Guys, bear with us for a minute. We're working through trying to get Discord connected. All right. All right, we're working on it. All right. I got a couple. No idea if anyone's on YouTube. I can't see anything on YouTube. I don't know why that is. Just as well, though. I'm sure people call me a jackass.
Hello, hello.
What up, brother?
What up?
We
I'm just
should
gonna
have.
check to make sure my
Yeah.
audio is coming through YouTube, but I think it is.
Oh, on YouTube? I have no idea.
I'm just checking now.
I mean, I see the desktop audio and the mixer and everything else moving, but I can't see anything on YouTube.
Oh, it is. Okay, perfect.
You can stay on though.
Yeah, I got dinner going in the background, but I'll be on here. So
Yeah, what in the
if
background?
you need me, dinner, cooking dinner.
Oh, dinner.
But it sounds like the YouTube stream has the audio going, so this should work for the future as well.
So we just
It's good to
open the
know.
YouTube, open the broadcast, connect Discord to it as a
Yep. And
source
it'll,
or a
yep,
scene, and then start it in here, and then we're getting both.
yep,
I wonder how the
yep.
delay's working though, because usually there's
It's
a
like a
delay on YouTube, right?
10, yeah, 10, 15 second delay
10 to
between,
15 seconds.
yeah. So when you say something on here, the YouTube stream is, yeah, like 10 seconds behind.
Oh, really?
Yeah.
That could be foobar.
But it will in terms of the questions, but it's not too bad. You just can't have both up. If you're listening through the workshop stage, you shouldn't have the YouTube open, vice
Order
versa.
filled.
You hear that?
Order filled.
Yeah.
Order filled.
Oh my God.
Order
All right,
filled.
let me get the post out. You D10.
All right, folks, join me in workshop and let me know you're here. I got 12 in the audience. See who all's in workshop. Type in a workshop. It's going to be brief tonight, and then we'll kill it, and then I'll stick around and do more specifics for ITG guys. But we're still going to go through the basics. Oh man. So we'll just wait, make sure we get some people from YouTube because there were a lot of people that reached out over the weekend. I don't have a way to answer them, but because I can't see any questions. Let me see if I can do a YouTube on another computer. Is anybody in Discord watching it on? I guess you guys have to be watching it on YouTube, huh? Don't guys, don't worry, I'm a boomer. All right, so we'll see how it all works out. Newer members, again, post your questions in workshop if you got it. I'll wait for AR to get back. We have not. Let's see how we want to do this. I'm sitting here watching futures, and again, don't worry about all the garbage. These are my normal charts. I didn't put up any special charts for tonight. I guess I could do this one. This is the one I work off of, and I just click and get rid of all the garbage, the noise for the majority of time, and I'm literally just sitting here watching price action. But we pushed up do we make R1? Yeah, this is what we were looking for. We were looking for R1 supply on NQ and ES. And then from there, I would not be surprised to see it work back down and fill the gap. Let's do this. Hide. So 5 minutes. Again, I was talking a little bit about it earlier, but just standard, guys. I bring up the zone. That's the halfback of the gap zone on NQ. And the halfback of the gap zone on ES would be here. I don't know if you want to adjust it because we made a lower low, but I'd be looking for 09.75 trading tonight, and I'd be looking for 491 to trade tonight. Nice, Lil B. And so again, all this is a gap fill. But we're going to come back and test half of it from Friday. The other thing that people got to be aware of is 1600 price. So big believer in the 1600 candle. This is where we were on NQ. Again, keeping in mind institutions. Look at ES with that was 55. So ES with a nice doji right here, right at 355 on Friday. Again, that was a very indecisive candle. For newer members, price action is everything. It's the ball in trading. If you're not here, I don't know why this is not. Okay, there we go. That drives me crazy. But anyways, just knowing at 1600 machines are turned off, there is a little bit of after hours trading, and then we spiked up here. We never came back down below the 1600 low on NQ. Here was the 1600 open print, just like midnight. Here's the 1600 print. We took out the top of the doji Friday, and this was a squeeze in after hours, and then it came back down, and people were like, oh, it's going to sell off. If it doesn't go below the 1600 price, you never take shorts, right? And I'm not telling you not to short down to it. If you're a DGen and you're still trading at 450 in the afternoon on a Friday, you can on Top Step but you can with some of the other prop accounts. There's a lot of risk, but you just got to know that we have not gone down here and retested where we were at 1600. And so this move up, from 50 on Friday, it's been untested. And so what's going to happen overnight? Don't know. We're going to see where midnight's going to be. But there's a really, really, really good chance of shorting back towards 490. I'm still holding an MNQ. I know I hit the $500 mark on the PAs
Order
earlier,
filled.
but I just left one on. I'm going to leave one on and just see if we fill it overnight. And if we go back up to highs and don't, then I'm okay with that. But just, again, a quick fib tool. What I do on my fib tools, and I didn't mean to do that, but what I do on my fib tools is I just have the settings so that I can have a standard template, have a zone, which is the halfback to 618. I do have a short target. Again, it's not anything you guys need. It's just when I used to scalp large, 50 NQ contracts, and I was trading with the NDX guys, or I was trading for them. I would use this template, and it's just different levels, fib structure. And then just a simple candle retrace is nothing more than halfback 0.25, halfback 0.75. So 100%, negative 0.5, negative 0.1, or negative 1, etc., etc. So, but I just would leave them on there to keep an eye on. Gap fills, especially Sunday night, often is a viable strat. Okay. Gotcha. Thanks, AR, because I really had no idea how to deal with that. So, and then again, guys, you know we got I hope you're pulling PVIs forward. I've already set up settlement in 1600 for NQ and ES, knowing that's underneath where we were. I have no idea where midnight's going to be tonight. I'll be shocked if we don't at least come back and test that midpoint of the gap fill between now and midnight. But we might not. We'll see what happens at 8:30 after Europe's fully opened in their initial balance. Okay, so yeah, no worries, Lil B. I mean, I figured, and again, you're talking ticks, right? So it's not like it really matters. So let's get into this week. ITG members, you're going to have the PVI template, the spreadsheet, and we'll go through that specifically. And I'm going to make this quick tonight, like 20 minutes. And I'd really rather ask questions. I'd rather people be asking questions and make it more interactive. Y'all don't need me to sit here and lecture to you. I do it all day, every day. But as we're pulling the SPX, and maybe I need to copy it so I can draw. I know there's software out there. That I need to get so I can kind of move, shoot, and communicate while on stream. But for now, again, the high side, the most important thing everybody needs to realize is this on the high side and this on the low side is 2 times the expected move. Okay, so we're back to the basics, but the basics are important. This gap between the cluster and 2 times expected move is a damn void, right? This is a black hole. We hardly ever run that black hole. Now, we almost ran the black hole. We were right down here. I'm going to give some of y'all PTSD and flashbacks, but we were right here below the whole model when Russia invaded Ukraine. And I'm like, holy crap, guys, we're on the edge of the earth. And it's a flat earth scenario. And then we ended up, after Russia launched, we ended up running all the way back through the model back into the high side of the model. Again, logic is no longer an indicator. So don't worry about that. But again, 2 times the expected move when it's detached. Now, if it's 1 bar over from these others, if it's sitting right here, you can't really negate that. But when there's separation between it, it's a blue falcon. It is not happening. It's a purple cow. Don't worry about it. We're not going there. So don't waste premium trying to sell here. Now, if something happens in the Middle East, if something happens to one of the presidential candidates, if something happens newsworthy that starts to really drive the markets, and all of a sudden the market is ripping to the upside or selling off just 3% down day, and you don't know what the hell to do, trade underneath there. Trade outside of there and sell naked. So for guys that are like, hey, what do I do on PVI when the market opens and we're like, down 1.5% on a Monday or up 1.5% on a Monday? Then, guys, you always want to, let's say PVI is here. I don't have it in front of me. I know what it is, but let's say it's here, and all of a sudden tomorrow morning by 10:30, the initial balance is done, and we're all the way up pushing, 5,900, 5,920. Don't sell PVI. Slide up the option chain and sell as far as you can to get the credit. That's why I tell everybody, the amount of credit you need for your seat time to pay for you to sit here and trade all week, you're the only person that can define that. Is it $100? Is it $500? How wide are you trading? How many contracts are you trading? Are you trading SPX or are you trading SPY? Are you trading XSP or are you trading ES? You guys have to decide that. You do not want to be trading more than you can hedge. So be careful with that. And then go through and say, hey, this is how much money I want to make a week. As you guys know, the way I do the PVI portfolio, it's $1,500 to $2,500 a week, right? Which is what? 1.5% to 2.5%. And that's 2.5% off the 100K portfolio, not 2.5% on the money at risk. The amount of money at risk is $50,000. Well, if you're making $1,500 off $50,000 at risk, your return on your capital exposure is substantially higher, 5%. Those are big weeks. But again, we don't need to necessarily get into the numbers in there. So then you're going to go, okay, I'm a delta trader this week, or I'm a theta trader this week. The model itself, there's 26 models in here. These are the 2 times the expected move, which means the expected move is somewhere in the middle. Okay, and these structures, the way the model profile works is each bar, right? This one has 4 bars and this one has 4 bars. Well, you can bet your bottom dollar that in the event that the market comes down to hits these two, it's going to play ping pong probably between these 2 twin towers. And it'll probably settle and close somewhere in here. Now, does that mean that as soon as we touch this, you're ripping off trades right here? If you got a death wish, I mean, if you want instant buns of steel like fucking instant mashed potatoes, then you can, but get ready because we might not stop there. But when you're looking at it, you've got a cluster here, and this would be more the aggressive cluster. Obviously, spot prices up here. This would be the more aggressive cluster, and spot is, way down here right now. So the way to trade it, if you're a butterfly person, is that you want to put a tent over this cluster, and then you want to put another tent over this cluster. Obviously, this is more aggressive, and this is more conservative. There's only one model in here, which means by the time we get up to 60,000, 65, we've already run over all these algos. Again, and what does it mean? Well, there's 4 models there, and there's 5 models there. There's 9 models right here, and there's 3 here. So there's 12 of the 26 models sitting right in this zone. So if you're I want to trade diagonals, meaning I want to buy following Monday and then sell this coming Friday, and I want to do it for a credit, but I don't want to go too wide, well, this would probably be the ideal purchase, 60.45, and then I would sell this one for Friday. But you got to go through and check the Greeks to make sure that if we do run up to this, the Greeks on this one are going to be more favorable for you so that your 60.45, I wouldn't do 30 wide. I'd probably do 20 or 25 wide. But this is the abyss. So you got to be careful if you're trading diagonals that way. But when you look at it, 12 of the 26 models are sitting right here, right in this cluster on the high side. Same on the low side, except we don't have them. We got 4 and we got 3. So we got 7 and we got 8, we got 9. We don't have a call wall per se. And that's what this is. And it's not a call wall as far as GEX. It's not a call wall as far as open interest. It's a call wall saying that this is what hedge funds, this is what portfolio managers are using. And there's 4 different models that if this is what they subscribe to, this is where they're planning on SPX going to this week. Does that make sense? But this would be a good diagonal, just as this would be a really good diagonal in my opinion. But I'd probably go underneath it. I'd go 59. I'd go 56.90, and I'd go 57.10 or 57.15. Again, the intent behind the diagonal is that your short side that expires this Friday gets tested. And the only reason it doesn't climb in value is because the theta is ticking off into Friday. Whereas the theta for Monday is not kicking down as much. And so your delta won't be higher, but your theta is substantially lower than here. And so there's going to be a point as we approach that, it'll be more favorable. But again, diagonals work when the market moves late in the week versus early in the week. If they move early in the week, they both balloon up, and then you start watching theta tick off your short side faster than theta's ticking off your long side, the further out trade. Okay, so we talked about a tent, a butterfly. If you're a butterfly person, if you are trading PVI or if you're selling credit spreads, you're better off trading on the edge, on the outside of the conservative cluster. And then as the week unfolds, in the event that we get, let's say we move higher, we get above weekly supply, well, where do you think you'd roll your PVI, your PCSs to? Well, I don't know where weekly S2 is going to be, but I would roll my PCS if Tuesday we're above weekly supply the whole day. Tuesday, I'd be rolling up to this zone real quick. And if there's no premium there, then I'd roll just behind this wall. Right? But I want to stay behind a wall as long as I can because that wall's defense for you. Does that make sense? I'll slow down for any ITG, any questions, workshop. Okay, so now we talk about theta. And so we got some theta ideas, right? Right? This guy doesn't matter. This guy doesn't matter. We got a tent here, butterfly here, a butterfly here, a butterfly here, and a butterfly here if you're a fly trader. And then the one that is, this is like the freest alpha in the most recent history. You guys, here's your debit spread. And I was sharing with AR earlier because Maven and Case were talking about their 5 wides. And guess where their 5 wide strikes were? 58.30 and I think 58.30 and I think 58.90. So, real quick, high side, call debit spread. Fly, conservative fly, a little bit more aggressive fly. Oops. Call credit spread up here. Put debit spread. Tent. Put credit spread is going to be in this gap. Now, I haven't looked at premiums, but you want to be whatever you can get paid for. You want to be underneath this last one if you can, because notice the high side is a wall, and then it trails off right there from there. Notice downside we got 2 twin bottoms, which means if the market runs to 57.50 right here, there's a real good chance the market's going to run all the way to 5,700. Because those are going to become your inflection points, your pivot points, your points of interest. And again, these are just model derived. Nothing to do with open interest, nothing to do with gamma nodes, high value nodes, low value nodes. Christian, good question. For YouTube members, one of our ITG members said, is the debit spread a 5 wide? You got to make those decisions yourself. Maybe you don't do a 5 wide debit spread. Maybe you just do a strangle. Maybe you buy one call and you buy one put. Now, if the market doesn't move, you're going to be in trouble, right? So the debit spreads do prevent you from too much capital outlay. But the debit spreads on the flip side, they also limit your income and your growth, your profit potential. So it's a either or. Oh, 5DTE. Yeah, again, guys, and again, man, the YouTube folks, y'all got to learn. I do this once a week, and I spend 15 hours getting ready for the following week on every weekend. And it's cumbersome, but my God, it gives us, it pays for, over $2 million of mortgages and, quality of life. And I don't have to work because PVI pays my bills. I only go to Friday. So if somebody said, hey, what are you thinking about, next week? I don't think about next week. Right now. I will in the future, but I don't right now. I do believe that we have another leg higher. I think NQ's got to work all-time highs. I know a lot of people are saying before the election. I think a lot of people are saying after the election. I know a lot of people are saying it might not happen until next year. I don't know. It's owed, and so the market's going to keep ripping. But the more and more people that expect the market, NQ specifically, Rusty's hit a 52-week high. The Dow's hit an all-time high and continues to. SPX hits an all-time high and continues to. And the put-call ratio starts dropping. Implied volatility and real volatility are at a pretty wide divergence right now. And so there's always an extreme chance of a rug pull. I do think that if you are wanting to play for this can't keep going forever, I think I agree with you. The market will not go up forever, and a significant correction is due. I think we're going to have a 10 to 15% correction sooner rather than later, but I would give yourself time. If you're at a spot where you're hedging a portfolio, man, why not play 3 and 6 months out? I mean, why do you have to time your bottom? Again, we did the same. I ghetto spread into an ES 56 or 5700 put debit spread on ES. Well, if I had not ghetto spread that thing, it would be down whatever my premium is, because the 5700, 5600 spread's only like $1 now. I have a credit, so my trade is completely free. And it expires Friday, the 25th, and I've had it for 3 weeks. So what I'll do is everything I trade past this week, I got to get it paid for. Debit. Again, your POTUS, love you, man, but Monday I would do a calendar from that standpoint, but again, there is no statistic goes out to next Monday. There's no statistics going out to next Monday. I don't have any. A ghetto spread that people are asking is you got to enter it first. And so the ghetto spread is like right now, if I'm expecting this gap fill to occur, like right here, then I would lock into my long puts right here. And let's say I pay $4.25 for my long puts. As soon as my 5 wide short put is marking $4.25, I sell it. That's a ghetto spread. That means I got a 5 wide debit spread, but it didn't cost me anything. It's a ghetto. It's free. It's a cheap way to get into a 5 wide and carry zero risk at no cost. It's a free trade. So again, we do the same thing when we talk about, doing a back ratio, right? Or a front ratio, meaning we've sold more than we've bought. You got to have a lot of margin for that. That's not an entry level trade. A back ratio is you get long, you get long 5 down here. You only sell 3 down here. You get the 5 paid for by selling the 3. As the market works back down here, you're going to be able to sell those last 2 contracts for a lot more premium than you paid and that you sold the initial 3 from. And the back ratio just allows you to improve your basis. But while you're improving your basis, you're also minimizing your risk. Now, when does a ghetto spread not work? When does a back ratio not work? It doesn't work when we go long here. We sell 3 here with a thought that when we get down to this zone, we're going to sell 1 more. If we fill the gap all the way, we're going to sell the 5th one and be 5 to 5 and a credit spread, and the last 2 contracts paid a lot more. When does it not work? It doesn't work if you sell them and the market goes up, 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 up. But if the market runs away from a back ratio option, credit spread, and the market goes higher and you've only sold 3 of your 5 put credit spreads, and the market goes higher, as long as your longs are covered, you just don't make as much money. But during the process, i.e. Sunday night, Monday morning, during the process, you've only sold 3 against 5, so you have less risk because you only have 3 100 wide trades on instead of 5 100 wide trades on. You only have 30,000 at risk instead of 50,000 at risk. So I look at it like this. If I can secure my longs and I can sell some shorts to cover the price of the longs, if the market drops, I'll improve my basis on contract number 4. I'll improve my basis on contract number 5. And I will go, okay, here's my basis. Now, if the market drops and I sell number 4 and then all of a sudden the market starts flushing, do I sell number 5? No. Why would you? Wait and let the market stabilize, right? Let's see how far it falls. Don't catch a falling knife. What are you waiting for? Again, if you're selling credit, you're not selling credit spreads off a 5-minute chart or a 15-minute chart. And so what do we do on flushes? Again, wait for the drop, wait for a retracement, wait for bottom wicks like we had, at 2 o'clock on Friday. And this was our 1405 trade. Wait for that. Look at that picture. I mean, my goodness. That's like stealing. And we're on a 5-minute chart. But that's like stealing. You can ghetto spread right there on that trade. Easy. Now, do we usually get bottom wicks like that? No. But some of y'all were trading it Friday because of the clock, and you were looking for this, and you had an opportunity. A lot of people scalp longs here. And kudos to them. So again, if you bought 5, you sold 3 right here, and said, hey, when we dip down to this zone, I'm going to sell 1 more. When we get back, we fill the gap completely. Maybe we go back into market structure. Again, everything about market structure is about looking left. Maybe we're going to get back into this zone. You got to be able to, for me, you got to be able to put on your weekly levels to kind of give yourself an idea. But, and then when my mouse is lagging. And then if it runs away from you, so you sold your 4th one, and then it moved higher and you never got your 5th one off, you just don't make as much money. But you got to realize, though, by not making as much money, what have you also taken off the table? Risk, right? On 100 wide, every 1 contract's 10 grand. So if you've only sold 4, you only got 40 at risk. If you initial opened 5 and 3, you only got 3 at risk. And technically, those extra 2 are about 20% hedge. They're really not because they're 100 points out of the money from your short, but they are an embedded hedge within the process. So back ratios are a great tool for people to start learning how to trade credit spreads. Okay, so PK, does that kind of answer ghetto spreads? All you're doing is, you got to go into it early. SL term penthouse spread, that you would go in here, and the penthouse spread would mean I would sell the call here with no long call, and then the market moves back down to here, and then I would buy the 5 wide call. So I basically shorted the far trade, I longed the closer trade, so I got into a 5 wide debit spread, but I sold first, and then I bought second, right? Sell high, buy low. You've got the inverse of a ghetto spread. A ghetto spread is buying low and then selling the short side when it's a higher price. Okay, POTUS got a question on PVI. Assuming you're buying 100 wide wings to limit BP usage, why not? You can use ES. You can use ES options or SPX. SPX options are, they're a little bit more favorably priced. But not, again, because your SPX options are not going to be 25 cents. So you're not dealing with 25 with one tick. You only got 4 ticks and a point on ES. You got a ton of ticks. You got at least 10 options on SPX. And so again, I know you guys, and again, not I'm the same way. Some of us cheap bastards, we'll fight for a penny on the Dom. Well, you're not going to get that on ES. And so your slippage is going to be higher, and your fills are not going to be as favorable. And then on ES, you're going to have to sell 10 instead of 5, right? Just out of leverage. 2 ES for every 1 SPX. So you're going to have trading comms involved. So you're going to have trading comms, and then you're going to have only 4 ticks per point versus SPX is going to give you 10, maybe 20 ticks per point. Right? Because you can sell them midpoint. So again, there's no wrong. There's no wrong. There's just you and your broker, your commissions. Do you want to trade SPX for $1.20 or $1.30 and see if you get a fill and maybe get a mid fill and average a 126 basis? Whereas ES, you're going to go 125 or you're going to go 150 and you're not going to play in the middle. To me, that extra 15 cents between 125 and 140 matters more than, again, you're not trying to, your entry doesn't have to be perfect, guys. The clock, the timing of your entry, your credit spread, you guys want to catch the absolute low tick and high tick of the day when you're selling credit. You're not. You need to go through and you need to figure out, look, this is how much money I want to make from my credit, my Theta portfolio this week if I'm trading PVI. And if it's $750 that you want to make this week, well, okay. If it's $750, I'm going to look at the options chain and be like, okay, well, realistically, I'm going to make $425 on the put side, and I'm going to make, $300 on the call side, and that's what I'm going to trade. And if you sell for, $425 and it goes to $600, don't beat yourself up. Now, if you sell for $425 and it goes to $1,300, you better go to the circus tent, and because you're becoming a case tutelage. But again, there's no real difference between SPX and ES, SPY, MES, XSP. You just got to know what your leverage is, and you got to know what you can and cannot do within your brokerage account. So, I don't really talk about tails and wings and the other verbiage that everyone uses, and I don't, because it's, everybody has different definitions for different things, and I don't want to confuse people. But again, I think if you're a spot, what do we, and I'll share this again. I know we got, one second. I know we got non-ITG members on YouTube, and that's fine. The weekly supply demand zone, guys, our ITG members know and swear by it. We've got the statistics. We're gonna hit. Let's do ES. Let me go back adjusted ES. This is 5-minute base. Let me go out with a 30-minute candle. Ooh. Let's do it here. I usually have a chart set up so I don't have to, hide certain things. And I'm not too worried about it. Let's go ES. And indicators, invite only, ITG. Where's our weekly? PWG weekly. So nothing else is here. Oh, this is not. That's daily. Our weekly PWG. This has our harmonic zones in it for the newer members. For our non-newer members, it's just a script we provide. These levels, again, I call them institutional levels. The reason I call them institutional levels is because me and a group of individuals that traded institutional money, I was the second smallest portfolio manager, and I had 680 million. I was peanuts. It was about 12 billion in assets. That's institutional money. So when I talk about institutional money, 12 billion in assets is from a group of 9 guys, and I had 680 million. 12 billion in assets is institutional money. Well, guess what we used? Institutional levels, these levels. So in looking at this, let's stick at a 15-minute and spread it out. So we talk about the weekly supply demand box, and this is really rehash for newer members. Old guys, OGs are going to roll their eyes. But this is the weekly supply level. And for ES, I'll just share it. It's 59.36 on the upside, and on ES, it's 58.77. We have a 99.97% chance of hitting this one or this one right now. So the way we trade this zone, and if we're going to sell call credit spreads, the first thing we need to do is we need to get over and let's see if I can put all this on the screen. I got my small screen up. So check this out. We're looking right here. ES is up 6 points. Okay. So the gap between ES and SPX is going to be 45 points. Right? 65 close plus 45 puts us at 59.10. So let's go 45 points. So let's add 45 points to 58.95. 45 plus 58.95 is going to be 59.30. Is that right? 59.30, 59.40. And look, weekly supply is sitting right here at 59.36. So what we typically do in ITG is we typically try to get a 5-wide debit spread at weekly supply and a 5-wide put debit spread at weekly demand. Why? Well, if you go 5-wide here and you go 5-wide here and you pay $1.25 for the top one and you pay $1.25 for the bottom one, you have now laid out $2.50. But we're laying out $2.50 for how much? 5-wide for a 5-width, which means if ES goes above here, closes above here, you make 5 points. How much money did you spend? $2.50. You doubled your trade. You got 100% return on your trade. If ES closes next Friday below weekly demand, how much did you make? Well, your 5-wide debit spread went 100% in the money. You got 5 points for your debit spread payout. How much did you spend? $2.50. How much did you make for your calls? 0. They went to 0. But if we got a 99.97% chance of hitting A or B, and we get a 5-wide for A and a 5-wide for B, and it costs me $2.50, and we close above it, I'm gonna have a 100% trade. Well, this week of all weeks, I talked to AR about it this morning. I said, man, do we want to share this free alpha with everybody? And I was like, no, let's do something different tonight. Let's do OPM or something else. We'll share it with them midweek. And then I was like, well, OPM's not really good this week. We have Tesla earnings. There's no blue strangles on the tech companies. So I was like, yeah, hell with it. Let's just do it. Give it away. But this is for you guys too. And so now the call debit spread right here and the put debit spread right here on SPX matches up almost identically with weekly demand on ES and weekly supply on ES. So you don't need to do both. You don't need to do both. Do one or the other. You want to trade ES? The options market is open. Go buy calls 5-wide at weekly demand. Now, if you're straight gangster, that's GANSTA. If you're that good, then get in and buy your long calls when the market starts to lift. And when we get above weekly buy trigger, sell the short call and work to get your $1.25 debit spread. Work to get it down to 75 cents. Now, what do you do here? Well, we've already talked about the gap, right? We've already talked about the gap fill. So if I'm going to sell premium down here on PVI, I'm still going to go back to this point, and at some point in this gap fill, I want to get my long puts here, and when we close that gap, or when we get half to the midpoint of that gap, I'm going to sell the short side so I can get this one way down here. I might be able to get this one as a ghetto spread. But look at us right now. We're hovering around buy trigger. Okay, which means I would not be surprised to see overnight continue higher. And we might even push up to this 1920, 1927 zone, harmonic zone. We might push up to it before that 2 a.m., 3 a.m., Europe's open, 4 a.m., where we spike and then we run the opposite side. There's a good chance that'll happen tonight. I'm not going to stay up all night to make a couple $100 or even a couple thousand. But you guys can't. But if you've never traded put debit spread and call debit spread at the weekly supply demand zones, I got news. This week, the SPX models are telling you, hey, this is 99.79%. And now the model's giving me a middle finger right here and a middle finger right here. And those two zones line up exactly with ES weekly supply demand. Almost exactly. Guess where we're going, folks? We're going to one or the other. And we're going to one or the other so much that I would almost tell you guys, if you're a consistent trader and you're a profitable trader and you've had success for the month of September and October and you're green on the month, you might just want to buy the strangle, buy one call and buy one put and not do a debit spread. Or you might want to buy a put at weekly demand and a put at weekly supply and not limit it if you're profitable. If you're not profitable, you need base hits, right? We talk about it all the time. The only way to score a run in baseball without hitting a home run is getting your ass on base, letting somebody else on the team carry it. Well, the market's already told us somebody on the team is going to move the ball up this way or it's going to move the ball down this way. It's going to do so on the models. 1 out of 26 says we're hitting here. The other 25 says we're going to run way past it. One of these sides is going to be right. One of them is going to be wrong. This is, with these two here, this is probably going to be the week that we hit both. So if the market starts up tomorrow, overnight, tonight, and Monday, I would be going heavy into put debit spreads. Now, if the market goes up, volatility comes off, and I can get a put debit spread at weekly sell trigger for $1.25, you think I'm taking that, or do you think I'm going to say no? I'm going to trade weekly demand. I don't care about weekly demand. I'm going to get as close to spot price as I can get for how much? $1.25. Why? Because the math works. $1.25 on the call side, $1.25 on the put side. If we close outside that box, you make $5 on a $2.50 investment. That's 100% return. Do it with one contract. If I went out right now and said, look, we're going to hit weekly supply or weekly demand, and we now have the market range profile, 1 of 26 is agreeing that one of these two zones are going to get hit, and guys go out and you go buy 50 calls and 50 puts, and they're not hedged at all, and we do nothing but chop the whole week and stay right in the middle, and earnings are terrible, are just muted, and there's no movement at all this week, and by Thursday you're down 90% of your investment, you deserve it. When do you size up? When you have profits. When do you size up? Play more aggressive. When you got discretionary income because you've made money. Trading from ahead of the curve is easy because you can recycle profits, 40% of your profits. If you made $18,000 last week just on Lamb Research and just on those NVIDIA on the option pricing model, if you made $18,000, are you willing to put $6,000 back at risk? A third of the money. Well, I did. Guess where I'm putting 4 of my $6,000 at risk? Right here and right here. Why? Statistical analysis tells us we basically got 100% of breaching the box this week. And we got earnings week. We do not have data this week. There's no significant, Fed data being released this week, but we're getting closer and closer to the election, which means the nuts are going to come out of the woodwork. Not that they haven't already. And we got North Korea with troops in Russia. And now we got NATO starting to draw a line in the sand. We got China starting to push maneuvers towards Taiwan. We got the Middle East heating up with, is Hezbollah going to be enough for Israel? Or are they going after Iran too? Is there going to be a retaliatory strike? Nobody knows any of this. But man, we have got volatility pent up, and we've got a huge divergence between implied volatility and real volatility. And you see that when you go to the portfolio. Said I wasn't going to do this, but freak. Guys, look. This is this week. There's no PVI there for non-members, but this is the template. This is the spreadsheet. And then look at baseline at 59.90 and PWG volatility is up at 60.76. 85-point differential between models. Look at the orange. The orange is telling us, guys, right now, the options market has no idea what's about to hit them. The options market has no idea what's about to hit them. And what's crazy is the only one that's blue is the damn earnings, Tesla. And this means the option model has priced in Tesla's earnings. Well, none of the rest of them are priced in. And I haven't gone through on something's wrong because I have on mine. Maybe I hadn't posted it yet. But I've gone through and I've already marked the yellows, which are more likely to breach PVI for the week. And there are a lot of them. You know, when there's one, it's a modest week. When there's 8 that are likely to breach the PVI numbers, and it's all orange over here, that tells me option premium, as much as I want to get $2,000 and $3,000 this week for PVI, is it worth the risk? I'm going to take the risk and put it into Delta trade. I never, in the history of doing that PVI spreadsheet for the last 4 years, I will not count a Delta trade as premium, as income for PVI. I don't do it. So if I only sell $600 worth of premium, that's it. We should move lower early in the week. I don't know if it's tomorrow or if it's Tuesday. And I don't know what the back half of the week looks like. If we move up Monday, Tuesday, then I would expect the back half of the week to be the opposite side. And just know that we are, a rug pull is almost imminent, but NQ needs, if NQ would make it up to 21.2, then we could rug pull. It's just NQ's waiting for a new high, a new all-time high. Back half of October, not positive for the market usually. Going into election, that is a big one. A lot of divisiveness across it. There's a lot of things that are set up for the market to dump. But if the put-call ratio starts to climb and spike and everybody's hedging, then we might not drop. But right now, everyone's not hedging. What am I looking for? The dollar and bonds and volatility. I'd like to see a push in bonds. Would show that there's a flight to safety per se. With the data as hot as it was last week, economic data, the chances of us cutting rates further become slimmer and slimmer. And again, NQ's rising on, 14 expected rate cuts, and we've gotten one. And now the next one, number 2, shouldn't be coming in because inflation's climbing, and we got the highest, inflationary prints, since early 2023, and that's definitely not what the Fed want to see. And then them turn around and cut rates. So we'll see. Okay, Milk's asking about difference in vol versus options in the low. Okay, all this is telling you, and again, you guys don't have all the data, but all this is telling you right now is all of the option, all of baseline. You could look at it this way. Baseline high is 59.90, base PWG high is 60. Which one's higher? Volatility. So it's orange. Volatility is higher. This is the vol model. This is the option premium model. And this is the secret mix model with coefficients. It's based off the models. This is just telling you that all the volatility models are higher than all the option models. And it's just a quick way for us to glance and see that. Let me do this. Oops, can't do that. Yeah, I can. 1 second. How about this month? Let's go full screen. Ooh, that didn't work. Mixed, right? Again, the most important is looking at the indexes. Let's go back to September 6th. Oh, we can't do that one. Let's go back and look at the volatility. Hey, what do you see here? Milk first. What do you see? Volatility? Look at how many breaches we had. Holy fuck. Excuse my language. This is what happens on big orange weeks. Holy truck. August 30th. Again, orange weeks, but we made it. Not all of them. One of them missed. But we made it. But look at what happened the very next week. We didn't make it. Orange, we made it. So we had high orange 3 weeks in a row. August 23rd, August 6th, September 6th. Gotcha. Blue. What breached? NVIDIA. High side breached. 124 versus 123. But look at the models. They were at 117, 113, 118. We were at 123 and still lost. Still got breached. And so you just go through and look at it. It's a quick reference guide. These weeks don't concern me. The weeks that concern me are these weeks where we run outside of weekly supply or weekly demand. Well, here we breach the low side. The low side. So we go outside weekly demand. We fall below it. We run through weekly S2. And are we going to bounce? And I sit here and look at it and I'm like, the option market are hurting. And so what does that tell me? That I know what are dealers doing. Dealers are backpedaling. And when dealers are backpedaling, the algos are sharks. Blood in the water. They're going to run it. And so this what happens. On August 23rd, we're orange. If we got to tested and clinched, I'd start hedging. Versus, there was one just 3 weeks ago. Yeah, last week was, but it was just indexes. None of the futures were. None of the single stocks. This week, if we run weekly S2, weekly R2, I usually don't hedge. Why? Because the option market have already factored in a move, and that move is probably going to hit a wall, a call wall, a put wall, and come back down. POTUS, what are you asking? No, it's green or red, man. It's win or loss. Closing win or closing loss. I don't care about intra week. Y'all color code it how you want. Now, I do on the spreadsheet. So in the event that we breach here, then yeah, I color it that we went outside PVI this week and finished inside. I went outside and finished inside. We went outside and finished outside. So again, the process and why I try to communicate certain things to you guys with how I manage the trade. I've been doing this for decades, not days, weeks, months, and years. So how this is laid out, this is a lot different than this. So this week, in the event that we start running, here's the numbers. 1, 2, 3, 4, 5, 6, 7. Here's seven possible breaches. And again, NQ, Rusty, and the Dow are 3 of the 7. Bitcoin, I told you I was going to move last week, and we moved. We didn't breach it, but we moved. Tesla's got earnings. Google and Apple are ripe to breach the models. I got to fill the rest of them in. But again, when we're all orange and we run weekly R2 or weekly S2, uh-oh. Because the options dealers and the options market has not priced in the move, which means they've got to reprice in the move midweek, which means the move could exacerbate, masturbate, whatever. That's for OHD. Don't worry, bro. It's live on YouTube. All right, anybody got any questions? I apologize. But again, it's just a process, right? My process is not the best process. My process is what's worked for me for, as a portfolio manager and outperform the market net of fees every year since 2002. And this is just, again, we're better at it now than we were 5 years ago, and we're a lot better 5 years ago than we were 15 years ago. Why? AI, being able to break down the models, being able to go through and pull data out here and all the other stuff and start looking at how volatility models can impact the market, where options are sitting. And we know this. And this one right now, guys, this is a free trade. So if you're on YouTube and you don't make money this week and we hit this side and this side, man, you might want to send yourself a self-addressed envelope with your resignation letter. It doesn't get any easier than this thing jumping out here saying, hey, we're probably going to test this one or this one. And so whether we go to one of them or both of them, everyone on YouTube, Twitter, Reddit, NITG, everyone needs to make money this week. This is big old high-res right here, big old condominium apartment complex right here, and you got a single-family home just sitting out here. That's the one the tornado is going to hit. You know it is. The black cloud is coming, or the cloud of profit is coming to this zone and or this zone. What's crazy is Case and Maven were talking, and exactly what the strikes that Maven has on the diagonals, literally they're like less than 5 points away from these two. So it's real interesting. If you don't know how to trade diagonals, I would definitely be more conservative than these on the diagonal strikes. Yeah, and again, Milk, this might be the one that you take a little, again, so if you're a credit spread person and you want to sell, take a little bit of the premium. If you take a little bit of the premium that you sell from this one and put on a debit spread here. Why? That's an embedded hedge. That's a passive trade. That's a fire and forget. Right here. And then pay for it with this puppy. But don't sell so many up here and you only get one of these. And this is 5 wide, and these are 100 wide. And the next thing you know, we move above these models, and we rip or we drop down here. And now you went from a positive trade to getting your face ripped off. POTUS, there are no coincidences, brother. So even though they're mechanical, guess what the models do? The models are able to pull the mechanics of certain trades and say, this is what they look like, and here's the visual representation. M-word. Never, no, I have no idea what you're talking about. Never happened. Exasperate. Oh, me. Sorry, OHT. But, and so you just got to be careful. What I don't want people to do is I don't want anybody, ITG or people I don't even know who you are. Guys, do not load up trades on these two and go and try and hit a home run. Again, do we get these often? No. Do we get this? We get this trade right here every freaking week. So what do we usually do? We take it out to the day. Get rid of all of them. We have not, I don't think we've released the beta yet with the, oh no, you guys have everything on the weekly. And so this should be pretty close to what PWG is for this week. Let me take off the vol. Where is my weekly? Why are you not showing up? Oh, girl. Daily. Let me take those off. Take them off. So all we have now is the boxes. And let's play this game. Did we close outside weekly supply demand last week? Yes. Plus 100%, right? 250 debit spread, $5 payout. Did we close out here? Yes. Matter of fact, we closed out underneath on Monday, Tuesday, and we closed above it Wednesday, Thursday, Friday. But if you have one trade on, fire and forget, on Friday afternoon, 1600 Eastern, you log in, you made $5 off 250. You made $5 off 250. Here, you didn't close it out. We moved in the middle. You lost 250. Here, you lost 250 in the last hour. I remember the day. Here, you made 250. Here, you made a fortune. 250. Here, you made a fortune. 250. Here, we closed back inside. Thursday, we're way outside. Probably closed it out. Here, plus 250, 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 plus 2. How many times did we double our freaking money? 1, 2, 3, 4, 5, 6, 7, 8, miss, 9, 10, 11, miss, 12, 13. 13 wins and 4 misses. 100% return. You're 13 and 4. Are you freaking happy? Yes. This is why we have so much statistical analysis and probability behind the trades, behind the systems, behind everything we provide. And you can't, and this is why we don't share it publicly. Why? Because I don't want the stats to go from 99.79 back to 94, because when it goes to 94, I don't make as much money. That means I got to go be like Trump and work at McDonald's to pay my mortgage. The amount of times we close outside the weekly supply demand box is uncanny. The amount of times we hit it is ungodly. It's not of this world. NOTW. It is not. And the weeks that we do, guess what? Like this week, we didn't even move outside the box. Guess what this was? Theta. Now, this week, this was a case clinching week. But even if it's case clinching, at least you got a passive hedge on, 5 wide. So I can't emphasize enough how important and impactful it can be for your portfolio and to help you. And yeah, it's a delta trade, but you don't have to manage it. If you work a job, man, get on Sunday night, get into an ES, weekly supply, weekly demand, 5 wide, call debit spread, put debit spread, don't pay more than $1.25. Get them on, go to bed, put the trade in, go to sleep, wake up in the morning. If it fills, go to work and say, you know what? If the market does its thing this week, I'm going to make some money. If the market doesn't, then it's a wash. If it's a wash, guess what? You didn't lose any money. Your portfolio, your long-term portfolio is still intact. Your 401k is still intact. Your home's still intact. Maybe you decide, hey, I have enough investable assets invested in the market. Maybe I only want to trade a put debit spread each week. and that's protection. And if we close below the weekly supply demand box, then you guys know we open the gate for a flush. It's rare for the market to move both sides. Here's why I think we go up tomorrow. Look at where we did last week. What did we hit? Weekly supply the whole week. We struggled with it. That's why we sold call credit spreads here Friday. Tight. We never touched weekly demand last week. This was the reversal week. This week, we touched all demand. Never touched weekly supply. What happened the next week on Monday? Monday and Tuesday was lower. Then we pushed up higher. Then what was Monday and Tuesday? Higher. How do we finish last week? This week, never touched weekly demand. Market's going up. Never touched weekly demand. Market's going up. Never touched weekly supply here. The top white. Market's going down. Never touch weekly supply. Market's going down. Never touch demand. Market's going up. What happened on Monday? Never made supply. Okay. Tuesday, made demand. Wednesday, closed below demand. Were PCSs clinching? Not at all. PCSs are around the yellow box, not necessarily at them. Not at all. But the fact that we didn't hit here, and this was breach week, right? Yeah, short week too. We didn't hit weekly supply, and then we got a short week, and then what happened? Friday, PVI got run over. I told you I was coming. I still traded it. I defended the trade, but again, it was hard for me to post a loss on the spreadsheet when you guys know that were trading with me. Man, it was literally $37,000 in ES futures profits that week, and it's now a $240,000 portfolio that started at $100K a year ago. It's crazy. And they've taken a $36,000 withdrawal. But again, it's just a process. Does it always work this way? No, but if we only hit one side of the weekly supply demand box, the next week we probably continue that direction. No, you don't. Yeah. But again, if you put on a debit and the put debit spread fills and the call debit spread doesn't fill, what do you do on Monday morning when you wake up? Go sell the call credit spreads. Guys make we as humans, especially males, we make it so much harder than it has to be. I kid you guys not, I literally can take a fourth grader and I can teach a fourth grader. If we don't touch the white line the whole week, the next week we're going to go to the top white line, which is weekly supply. We're up right now. As soon as we fill the gap, I'm buying weekly supply demand call debit spreads. If we only touch the top side and we don't touch the bottom side, we are going to start up the next week. And what do we do Monday? We opened here. We went as high as weekly supply and we closed right here. And then Tuesday, we didn't touch weekly supply. Uh-oh. Here's where we roll our PCSs. We open up. We close above weekly supply. We spend all day Tuesday. Open, high, low, close. It didn't, right? We wick just underneath it right here. But if we didn't touch weekly supply, that little bit, and that was probably in the last 10 minutes of the day, if we didn't touch it, we roll up our credit spreads from wherever PVI PCS is up to just south of weekly S2. Why? Let's get paid again. Let's get paid on a call debit spread, 5 points. Let's get a call credit spread up here, expires worthless. Let's get a PCS, hit 85% profit, and on Wednesday, roll our PCS and get paid. Let's get paid on a PCS 1. Let's get paid on PCS 2. Let's get paid on call debit spreads. Let's get paid on a call credit spreads and then we walk into the weekend like We're moonwalking. Who's your freaking daddy? It's just a process. Again, open Monday, we close well below weekly demand. We never got back to weekly demand. You're rolling your CCSs down. That simple. If we don't have an open high-low close, here, Monday, open, we close above weekly supply. All day Tuesday above weekly supply. We roll up our put. I roll up my put credit spreads. And again, when I say I do it or we do it, it's a suggestion, guys. It's a guideline. Because you know what? I have no problem shorting 25 ES contracts short to cover a PCS that might get run over. So I roll them up because I know how to defend. But if somebody is in stream or DMs and going, hey, what is a PCS again? You probably shouldn't roll anything. You need to be more conservative, not less conservative. But again, the times that we close, again, this day on the 12th of August, we didn't close above weekly supply. So did we ramp? Yes, but I wouldn't have rolled my PCS this week. Why? Because when it's usually safe when we close above it on a 5-day week, never on a 4-day week. We close above it on a 5-day week. We spend all of day 2, which is Tuesday, open, high, low, close above the level. Then I typically roll it, and I think I've been challenged maybe 5 times in the last 3-4 years where rolling it up to weekly S2 hurt me. Now, in the event that we had one of these days where Tuesday we just wicked on it, like this one, but it was in the last 5 minutes of the day, I look at it like, man, the last 5 minutes of the day or the last 10 minutes of the day, we came right back down to it. I would never roll. Why? Because we really didn't close, open, high, low, close, and close above it. We ran right to it in the last 10 minutes of the day. I don't need it. Like here, Monday, closed above it. It was a doji. Tuesday, we wicked down through it. Look what happened. Wednesday, and then Thursday, and then Friday. So if you would have rolled this week, let's do it. All I need to see is S2. If we would have rolled this week, here was S2. Rip. PVI loss. If you rolled it. Why? What told me? The doji? Yeah, maybe. But day number 2, that wick down into it, don't touch it. And you know what? This is why I tell everybody the guidelines are there for a reason. They're not there for me to be the negative nanny and talk you out of a trade that you could be profitable on. And again, my big thing is this. Look, PVI's got certain set of rules, and man, if you wanna run outside that umbrella of grace and see if Satan can catch you before you can get back under it, be my guest. But guys, if it's not obvious and easy and clear, don't do it. Go find alpha with cases systems. Go find somebody else's systems. I think 2 times since 23, we've literally closed above weekly supply on a Monday. We stayed above it Tuesday, and then Wednesday, Thursday came back down to test weekly S2. It still didn't breach it, but it tested it. And test means clinch. And again, clinching is not fun for most of us. Clinching is fun for Case and a couple others, but I don't sell at the money stuff because that's a clinch factor for me. Moose, makes millions off of it. All right, guys, a lot longer, but y'all know what happens. We start doing the workshop, and next thing you know, we go from SPX market range profile to PVI to watch volatility to let's look at the models versus weekly supply demand to, oh my gosh, there's some obvious trades this week, and there's a lot of orange, and orange is nothing more than major caution flags. If the market starts running, do not assume the market's going to stop on both sides. So we could have a trend up week, or we could have a trend down week, or we could have a massive look and fail on the upside and the end of the week be absolutely blood red. Who knows? I don't know. But I know one thing, we're probably going to go to weekly supply and weekly demand or both. And we got a 65% chance of hitting both of them. This might be the week that we hit both. So if we hit weekly supply tomorrow or Tuesday, man, maybe you need to roll up your put debit spreads and get a second put debit spread at a higher price. As close to spot as you can get, but do not pay more than $1.25 for a 5 wide. That is a great risk reward scenario. All right, guys, with that, I am out. I'm going to kill stream. Appreciate all our YouTube folks. Again, chit chat in our subreddit. Ask questions. The only way we all get better is to dialogue. Ask questions, guys. I mean, there's no dumb questions. Just ask. But do some research. Again, I mean, I'm not changing adult diapers. So do some research. Go back through some of the posts. If you're not willing to spend time learning some of the